Whoa, something absolutely incredible just happened in the Asian markets. On February 3rd, 2026, we saw a rebound of truly historic proportions, and it sent shockwaves across the entire region. So today, we're going to unpack exactly what happened, and maybe more importantly, why. And yeah, we've got to start right here with this number, a positive 6.84%. That was the staggering single-day surge in South Korea's KOSPI index. Look, a move this big is incredibly rare, and it's a huge signal that something fundamental has just shifted. So, to make sense of this wild day, here's how we're going to break it all down. First, we'll get a quick snapshot of today's rebound across Asia. Then, we're going to try to decode what some analysts are calling Korea's fire pillar rally. After that, we'll look at the really strange split between mainland China and Hong Kong. And finally, we'll wrap up with a strategic outlook for what February might hold. All right, let's dive in with the big picture. Section 1, today's historic market rebound. It was a truly remarkable day, so let's get a feel for what went down. I mean, just look at all that green. The sheer scale of it is pretty astounding, especially over in Korea where the KSP just exploded, up 6.84%. Mainland China also had a fantastic day. But notice Hong Kong's tech index, the HSTECT, it's actually in the red. That little contrast right there is a huge part of the story. Okay, so what on earth caused this fire pillar rally in Korea? For our second section, that's what we're doing. We're decoding the surge. What could possibly light a fire like that under the market? Well, it really boils down to one single, incredibly powerful catalyst. A report came out projecting a 90% jump in contract prices for DRAM, that's a type of semiconductor memory, just for the first quarter of this year. Now, for a market like South Korea that's so heavily weighted in tech and semis, this news was like pouring rocket fuel on a fire. And look, this wasn't some random rumor floating around. The source, as you can see, was a widely respected report from TrendForce. When a forecast this dramatic comes from a source that credible, the market doesn't just listen, it reacts, and boy, does it react fast. So what does that news actually do to the market's biggest players? Well, this. Samsung Electronics, the absolute titan of the KOSPI, skyrocketed over 10%, hitting a new record high. I mean, to put that into perspective, Samsung alone was responsible for more than a third of the entire KOSPI's gain today. That's just the incredible power of a market heavyweight. But you know, it wasn't just the DRAM news. There were a few other things that really created the perfect storm for this rally. Samsung's been making some really smart investments in next-gen chip tech, like the stuff needed for the AI boom. And on top of all that, some geopolitical jitters, which people were calling the war risk, started to fade, and that helped stabilize the Korean currency. But that still leaves us with a really interesting question, right? We know the what, a ton of good news. But how does that good news create a recovery that's so incredibly fast, so perfectly in sync across the board, and a perfect V-shape after the drop we saw just yesterday? To get our heads around that, we can look at this really cool theory, swarm intelligence. The idea, basically, is that investors don't always act like logical individuals. Sometimes they act like a collective swarm. That positive news was like a signal that made the entire swarm shift its behavior. All at once, from playing defense to aggressively buying. And that could explain the incredible speed of it all. And there's another way to look at it, too. Ken Fisher calls this pattern the zigzag waltz. He says the market, which he calls the great humiliator, will often pull off a sharp, scary drop, kind of like what we saw on February 2nd, just to shake out all the nervous investors. And it's right after that shakeout that the real, powerful rally kicks in. So what we saw today might have just been a classic step in that waltz. Okay, so while all this craziness was happening in Korea, a totally different story was playing out in China and Hong Kong. It really is a tale of two markets, which brings us to our third section. I mean, mainland China was just on an absolute tear. The Shanghai Composite hit a 10-year high, which makes 13 straight days of gains. This whole thing seems to be driven by two main forces. Everyday people are moving their savings into stocks, and there's this massive hype cycle around brain-computer interface, or BCI tech. And this is where you really see the split, the tale of two markets. While mainland exchanges are being fueled by domestic savings and this new tech hype, Hong Kong is getting dragged down by the exact opposite. You've got fears of a new tech tax, a really shaky property sector, and a lot of people are starting to question if all the money being poured into AI will ever pay off. So you gotta ask,
Why? Why the huge difference? For a deeper answer, we can look to a field called institutional economics. It basically argues that a country's long-term success really depends on its core institutions. Are they inclusive, meaning they protect and encourage broad investment, or are they extractive, meaning they tend to take from one group to give to another?
And this theory plays out perfectly with what we're seeing right now. South Korea is making a major inclusive shift with big reforms that are making investors feel a lot safer. Meanwhile, the pressures on Hong Kong's tech stocks feel a lot more extractive, and that's creating a level of risk and uncertainty you just don't see in Korea at the moment. All right, so what does all this mean for the rest of the month? In our final section, let's look at a strategic outlook. And just to be super clear, this is an interpretation of the analysis. It's not financial advice. It's really just a framework for thinking about the month ahead.
So if you put all of today's data together, the forecast suggests this momentum could actually keep going. The analysis projects more gains for the KOSPI and mainland China's SSC composite, thanks to all those factors we just talked about. But, and this is key, notice the continued negative outlook for Hong Kong's HS Tech Index. Those institutional pressures are really expected to keep weighing on performance there.
So the big question is, how could you turn this analysis into, say, a quantitative framework? Well, the source material lays out a pretty interesting four-part strategy. First, overweighting Korean semiconductors to ride that DRAM wave. Second, taking a position in the Korean brokerage sector, because they do well when trading volume is high. Third, hedging against the Hong Kong tech sector to manage that specific risk. And finally, getting some tactical exposure to those BCI stocks that are caught up in the hype in China.
And here's what that looks like as a portfolio. It's really a structured way to think about it. The goal is to capture the upside from the day's biggest trends, Korean semis and Chinese BCI tech, while at the same time actively managing the very clear risks we're seeing in the Hong Kong market. It's a balanced, data-driven way of looking at things.
You know, all of this just brings us right back to that Ken Fisher quote. It's just the perfect summary of today's events. The market truly can be a great humiliator. I mean, just yesterday, things looked pretty bleak. Today, we witnessed one of the most powerful rallies in recent memory. It's just a powerful reminder that patience and perspective are everything. And that, of course, leaves us with the final, crucial billion-dollar question. Today's historic rebound was a definite zigzag upwards in the market's waltz. But what's the next step? Are we going to see another surge built on this incredible momentum? Or is there a correction waiting just around the corner that will once again test the resolve of every single investor? That's what we'll be watching for.